Ladies and gentlemen, good day and welcome to NMDC's Q2 FY24 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Dixit from ICICI Securities. Thank you, and over to you, Mr. Dixit.
Thanks, Stephen. Good afternoon, everyone, and thanks for joining the call today. At the outset, I would like to thank the management for giving us an opportunity to host this call. From the management we have today, Mr. Amitabh Mukherjee, Chairman cum Managing Director, Additional Charge, and Director Finance. Without much ado, I would invite Mr. Mukherjee for opening remarks covering the company's performance and outlook, post which we will open the floor for an interactive Q&A session. Over to you, sir.
Good afternoon, and thanks for joining. Well, this Q2 and H1 has been the best ever. So that's a big positive that we have. Our production, as you know, was 25% higher than last year. Sales was around 14% higher than Q2 of last year, and these were the best ever. Even H1, every month of this year, right up to October, bar one, except for 1 month, we have done the best production and sales. So we've got the momentum going for our target of 50 million ton. We hope to achieve around 50. There are 2 or 3 big projects that are going to start anytime now within a week's time. One is the one at Bacheli, which will augment our production capacity by 2 million ton, and the final clearance for the Kumaraswamy mine in Karnataka for about an additional 2.2 million ton will also be available within hopefully within a week or 10 days. We expect to flog these 2 new facilities as well, so that we can reach our stated target of 50 million ton. On the capex front also, we've been doing pretty well. We are way ahead of our target. We are around 40% higher than last year, what we had done up to this time, and around 80% higher than our proportionate target for the year. We'll definitely cross the capex target of 1,600 crore rupees that we had set up ourselves in the beginning of the year. We are going to cross that. So overall, the momentum is there, and we hope to achieve unprecedented results in the H2 as well. So we can now take questions.
Thank you very much. We now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Yeah. So, thanks for the opportunity. So just one question on the part of the realizations. Like, if we see our realizations, even if we see the current prices, they are at a discount of roughly around 5,500 rupees compared to the import parity price. And the prices have moved significantly over the last 3 odd months, but our prices have not changed since last month. And over the years, we have never seen such a big discount, like say around 45 or 47% of discount. So what's happening on the pricing front? Even if we see the Karnataka, we have not done the auctions of the fines for the last 1.5 to 2 months. And I don't know what's the realizations there, but the way our revenues are there, it seems that realizations of Karnataka are far higher discount as compared to other markets, or like say Bacheli or Chhattisgarh.
Yeah, the pricing front, of course, we are slightly higher than last year. our realization in H1 in Q2 is around 4,146 rupees per ton, which is around 7% higher than the year-on-year basis. And in H1 also, we have grown by 8% in sales. It's around 49.28 per ton. Obviously, traditionally, even at East Coast, as compared to the export prices, the general discount has been around 40 to 45%. And that is how it works out. But even at these prices, we have worked out that if we factor in 30% of export duty and then the port charges and other things, our domestic realization would be higher than net back of the export realization, because you know that so far as we are concerned, that for export we also have to pay the transportation up to Vizag, which is almost $20 in dollar terms. So when we see the net realization at the mine head, net of taxes and duties, even at this level, our domestic realization is more than the export realization, and that is why there is no as such economic case for an export. But yes, there is a strategic case for exports, and then we are looking at it. What sort of a strategic case should be there for future. So we need to enter the market and have some presence for future. Not immediately, because immediately in terms of a pure math, it doesn't work out right now. I make more money net of taxes, net of transportation, net of duties through domestic sales rather than through export sales. Apparently, it looks like a 45% discount, but still, when you factor in all these deductibles, domestic sales is a preferred policy purely on economics. I know that. Yes, the prices in Karnataka have been traditionally lower than that of the Belladera sector, because of the quality. Obviously, the Belladera quality is completely different and much better than the Karnataka case. That is there. And Karnataka doesn't have access to markets beyond Karnataka to that extent. So we have to be a sort of a local player. Yes, we've just checked. Our IBM prices there are slightly higher than us. In Chhattisgarh, of course, our IBM prices are exactly the same. But in Karnataka, it is slightly higher, so which gives us some amount of headroom there. And we'll take a look at it and take a call sooner than later.
But based on your answer to the question, it seems that you are just focused on the export netback. But it's not the case, because over the years we are paying roughly around 22.5% additional royalty. Why we are not leveraging that? Because if say any importer is there, or say any steel company importing iron ore, why don't you think on that part, how much their cost would be if they import the iron ore?
I'm talking about landed cost basis only. Obviously, on landed cost basis, you know the duty structure. On high grade iron ore exported is 30%. On import it is 2.5%. So naturally, even at 45% discount for us to sell outside, we will be taking a hit on our bottom line. But for a steel maker, yes, still that is why they still buy from us, because still it is cheaper. And it's always been the case, and that is why there is hardly any import into India, because of the duty structure that is there, and it has been there for years now. 30% export duty and 2.5% import duty. It is obviously not very viable for us to export, but when the prices go down, it becomes viable for a steel maker to import. And it has happened previously. We know that 18-19 it has happened, and again I think 19-20 it has happened.
Great, sir. Thanks a lot.
Thank you. Next question is from the line of Alok Devara from Motilal Oswal. Please go ahead.
Sir, good afternoon. Just had a couple of questions. First on the target of production for this year. In the last call, we mentioned about around 47 to 49. Are we sticking to that number or any updates on that? And also, there was certain capacity which was expected to get operational by September. And what is the status on that at Bacheli?
That's what I said in my introductory. We are still sticking to 47, 49. If you know that H1 we have done around 20 million tons in H1, and right now I think we are at around 28 million ton. We are at around 24 million ton mark. Approximately at 24 million ton mark. So we are on our way. If you see the H2 production last year, if we even do 10% better than that, then we should reach around 46, 47. And two major projects, as I was mentioning in the introductory, that one is the fifth line at Bacheli, which is likely to add up 2 million ton to our production. So that is almost that is complete. We are waiting for the CTE. Load testing has been done, and I think we'll go on stream hopefully in the next 4-5 days. So all the testing etc. has been done. So it's a 2 million ton annual capacity. Hopefully in the half year we'll be able to do more than 1 million ton out of that. We are trying to target 1 to 1.5 million ton out of that. So that will be an incremental on that. And then Kumaraswamy mine, as you know, that we have got all the approvals. One final approval is due. So we hope to get that within a week to 10 days. So then Kumaraswamy also we can ramp up the contracts are all in place. So that's another 2 million ton, 2.3 million ton additional. So that is 4.3 million ton of additional. So even if we can in the H2, even if we can do about 2.5, 3 out of that 4.3, so I think we should be able to reach 49, 50 around. We must be just touching 50 or just a little lower than that. So 47, 49 still holds good so far as we are concerned.
Got it, sir. And sir, you mentioned about the capex. There's been a sharp jump in the first half. What's the capex we have done in the first half, sir?
The capex till date we have done around 1,000 crores, 1,008 crores or something till date, against annual target of 1,600 crores. So we are definitely going to exceed that. We should be in somewhere around, I think, 1,800 to 2,000 range this year.
Got it. Sir, just one last question. So just wanted to get an update on this NMDC steel, this divestment status, because recently there were comments that it is not going to get divested. So just your update from your side on that.
As of now, we don't have a clear visibility on that issue. So in fact, we should be referring that to Deepam. There were, I know that against the EOI multiple offers have come, but thereafter, because of the election in Chhattisgarh and other things, I guess further progress has not been made. But yes, the draft SPA was also discussed with us, and from our side, we have given the go-ahead. Whatever was asked from us, we've already done. But the exact what is the situation now, I am unable to comment.
Got it. Thank you so much, sir. All the best. Thank you.
Thank you. Next question is from the line of Noel Vaz from Union Asset Management. Please go ahead.
No, my question has been answered. Thank you.
Thank you. Next question is from the line of Ashish Kejriwal from Nuvama Wealth Management. Please go ahead.
Yeah, hi. Good afternoon, everyone. Thanks for the opportunity. Sir, two questions from my side. One, if I'm looking at realization for this quarter, we observe that realization have been somewhat subdued, more subdued. YOY basis, lumps prices have declined by 2%, while fines prices have increased by 11%. So my question was whether is there any adverse product mix this quarter within lumps and fines, or
Is there anything else which we are missing in terms of realization?
No, in terms of overall, as compared to Q2 of last year, yes, it has increased, but as compared to Q1 of last year, it has decreased. In terms of the immediate previous quarter, of course, overall it has decreased. Now, if you see the Bella sector and the Donimalai sector, they of course behave differently. Of course, the trend is the same, but from Q1 it has slightly decreased, not by much, by around 10%. But as compared to Q2 of last year, that's the year-on-year figure, we have had a reasonable amount of increase. Yes, there were pricing pressures earlier, but I think we have taken, one or two price hikes recently, the last being on 1st of October. So now we'll again take a call on what the pricing looks like. Excuse me.
No, sir, my question was that, fines prices were higher, but lumps prices were under pressure. So are we witnessing any shift in the product mix within lumps, or is the grade remains the same?
So the grade remains the same. The lump prices are still higher than the fines, but yes, the demand of fines is has looked up much better than the demand of lumps in terms of, and that is why the headroom maybe for fines might be slightly better than the lumps. Okay. I think there's a tremendous demand for fines right now, and I think we can have a look at the pricing. We'll be having a look at the pricing pretty soon now.
Sure. So that means that, if I'm looking at OMC's recent auction as well as global prices, and keeping in mind that domestic steel or sponge iron prices are almost flattish type, then there is a room for further price increase if the demand is good in, at least in fines, if not in lumps. Is that assessment right?
Let us see how does it translate into a pricing opportunity. That needs to be seen, because there are multiple factors to be factored in. The steel prices are a dampener. The demand is a good trigger, but the steel prices are dampener, but the international prices are again a good trigger. So we will factor in all these things. Of course, the pricing does take into account multiple variables, and we'll take a call hopefully in the next 2-3 days how the pricing should be.
Okay. Secondly, sir, we talked about Kumaraswamy mine, but that's a 3 million ton mine. I think you mentioned 2.2 to 2.3 million ton. So,
this is 7 million ton mine. We have requested for an EC of another +3. But EC we have got +3. But within Karnataka, as you know, that there is a ceiling that is to be redistributed. And what we are getting as of now is around 2.3 million ton of extra mining permission.
Okay, so we will have a capacity of 10 in Kumaraswamy, but as of now, permission will be up to 9.3.
Yeah, it's 9.28 or something. There's a fraction involved there.
Fair,
so let's take it at 9.3 approximately.
And sir, is it possible to give status on your different 4 projects which are ongoing? One is your screening plant 3 at Kirandul. I think you mentioned about 2 million ton for that only, or something else?
No, that's the 5th screening line in Bacheli, which is ready for commissioning.
Okay, so that will help us in increasing volume by 2 million ton.
By 2 million ton.
Okay, so sir, different status of this, like screening plant 3 at Kirandul or slurry pipeline.
The rapid wagon loading system is being commissioned. I think it will be commissioned after 17th. 17th is today, so there's an election in Chhattisgarh. Thereafter, one CT is consent to operate permission is required. So hopefully we'll get it in the next 7-8 days, and we'll start the rapid wagon loading system. So the siding that was loading 2 rakes a day will now load 4 to 5 rakes a day. So that part of SP3 project will be operational. The stacking yard will be operational by February, May. But we've had a problem there in the other area, in the sense that due to the monsoons, one of the gabion walls there's been a problem with the gabion wall which we had constructed. So that's going to sort of delay the project by a couple of months. So instead of 24 mid, which we are which we were expecting to commission the plant. I think we should be able to commission the SP3 by 24, rather by around 25. That should spill over to 25 because of the various challenges that we are facing at the site. But half of the facilities we will be able to commission by end of financial year, which will substantially increase our evacuation. I think our evacuation will increase by 2-3 million ton after the RWLS that will be commissioned by this month and definitely, and also after the stacking yard is commissioned by the end of this financial year.
Okay.
The next big project is, of course, the slurry pipeline. All the contracts have been given. All the contracts are there. The pipeline laying is going on. I think out of 113 kilometers, around 70 plus kilometers, we have already done the stringing and laying. And another 35 kilometers, I think the pipelines are being ordered. So that is on track. Now there are the head end. There is a beneficiation plant. Our contract has already been given around 6 months back. The contractor is working. We expect to have that beneficiation plant by end of 24 or early 25. That is, and the pellet plant, of course, that was progressing very well, but we have put it on hold because we want to increase the plant capacity from 2 million ton to 6 million ton. So, because we have gone back to the drawing board, so let us see how we design the additional 4 million ton line. So that's under discussion, but we have taken an in-principle decision to increase the capacity of pellet plant near the steel plant, which is just bordering the steel plant, next to the steel plant, from 2 million ton to 6 million ton. That's a decision that we've taken. We are working out the engineering of it and the economics of it, but we'd like to have that as 6 million ton. The SP2 at the screening plant 2 at Donimalai, which is a 7 million ton capacity and which will have upgradable to 10 million ton capacity. That tender will be awarded next month. The offers have been received and we are evaluating the offers. I think 3 offers have been received. So we should be able to award that somewhere around middle of next month. So these are the 3 big projects we have. Apart from that, we have of course housing projects and others worth of 400 crores and 300 crores and 400 crores. So that will be able to see a little later.
And the doubling of railway line?
So that's progressing fine. About more than 100 kilometers has already been commissioned out of 131 kilometers. So 2 block sections they are working, which is the toughest block section. One is near Bacheli and between Bacheli and Kirandur. And that should, the railway has given us a visibility that they should be able to do it by the end of the financial year.
So, sir, if I look at the entire thing in perspective, we are seeing that rapid wagon doling system that will increase our evacuation capacity by 2 to 3 million ton. Besides that, unless until our railway lines get doubled, we will not have enough evacuation capacity.
No. I think that's there's a slightly misperception out there in the field. I want to make it clear that our current as it stands, the single line has a capacity of 28 million ton evacuation. And this doubling also, because patch doubling, you can take the benefits of patch doubling. It need not be complete end-to-end to take the entire benefit. As and when it is fully complete, it will be for 40 million ton. But right now, the capacities are around 35-36 million ton. So that's not the issue. The issue is availability of rakes and wagons. So even right now, from Bailadila, we are evacuating only 20 million tons by way. Around 7 million tons through conveyor, 2 million tons through road, and around 20-21 million tons through rail. So we, in terms of line capacity, we have adequate headspace. In terms of line capacity, that's not a constraint. Okay. The constraint is the availability of the number of rakes in the KK line. So once it goes up, about one rake is about 1.3 million ton. We are average getting around 18 to 19, 18 rakes, 16 to 18 rakes. So, but once that availability goes up, then the current line can also cater to another 7-8 million ton easily in terms of line capacity.
Understood. So, sir, unless until rakes availability increases, with the same rakes we can at least extract a higher 2 to 3 million ton because of this rapid wagon loading system.
Quicker
turnaround.
Loading. And once our loading yard is commissioned for SP3 that I was telling, this 2 rakes, which is likely to become 4 rakes now, will become 6 to 7 rakes a day from that siding itself. Once the stacking yard I will commission in around February, March. That's the target as of now.
Thank you. Ashish, I'll request to come back for a follow-up question. Next question is from the line of Satyan from Profusion Investments. Please go ahead. Satyan Wadhwa, may I request you to unmute and go ahead with the question, please? Satyan Wadhwa, can you hear me? No response. We move on to the next participant. Next question is from the line of Pramod from Unifi Investments. Please go ahead.
Yeah. Hi, thanks. My question is like, with the heavy investment in the NMDC, still kind of the project gone behind us, are we looking to jack up the dividend payout significantly? What is our dividend payout policy now? Since we don't have, any huge capex.
The government is very in the public domain that we have to pay a minimum dividend of 30% of our net profits or 5% of our net worth. Traditionally, we've been paying around 40-45% of our net profits. If you see the last 6-7 years, in terms of if you combine the buyback and the dividend, the payout to our investors has been in the range of around 40-45% of our profit after tax. So the board will take a final call when and what to take a. But we are designing a lot of capex because we want to get this organization ready for the 100 million ton outlook. So basically, we have appointed a lot of. We have appointed 2-3 consultants to give us their inputs on what sort of marketing infrastructure we need. As you know that Kumar Swamy, we have not Kumar Swamy, Kumar Maranga near Jagdalpur, we have already commissioned, and that is the first place that where we are selling from a stockyard. So we in future would be building a lot of stockyards to cater to different type of customers. We believe that the market needs to be segmented in terms of types of customers because the blast furnace steel mills, the integrated steel have requirements as compared to the sponge iron plants. And we hopefully instead of having a vanilla product as of now, we are planning to have customized products. So we have set up consultants, and in about 3 to 6 months' time, we'll have a clarity on what sort of investments that we need to make to have customized product for different classes of customers rather than have a vanilla product for all of them.
Okay, sure. And then next is like whenever we invest, incremental capacity, not in the mining, but the allied capacity like stockyard or the railway line or the evacuation facility, how we get compensated? How is our ROI on those capex are? Is it like linked to the any relation, or we charge over and above the relation some cost to the?
We charge over and above the relation. Most of these mining projects have an ROI of well above 50%, even at the current tax ranges. So the worst of them have a ROI of around 30%. So mining that way.
No, I'm talking about the allied. Apart from the mining, whatever the capex we do.
Apart from the mining production increase, whatever capex we do has a very healthy ROI of 20-21%. Or even more than that, 25% as far as their ROIs are generally in the range of around 25%. Because when you make customized product, the value realization is higher than the vanilla products. So that is now our next target, to have facilities which can make these customized products rather than selling it off the mine head as a vanilla product.
Okay, great. Thanks. That's all from my side.
Thank you. Next question is from Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Sir, just wanted a clarification. You said that you would be increasing pellet capacity from 2 to 6 million tons. As I understand, our 2 million tons was also not running well. So can you just give us some insight that whether we have solved the problem and now it's ramping up?
Let's not confuse the two pellet plants. The pellet plant that you are talking about is at Donimalai, which is about a 1.2 million ton pellet plant, which has never worked well. That is for a separate reason altogether. That pellet plant was designed for consuming 85% slimes, and only 15% is the fine circuit, right? And we never got the slimes because of regulatory issues, because of lease not being renewed, and now that the lease is being renewed, there's a dispute with the tailing dam, as a result of which we have not been able to get the feed into the pellet plant. So that's a completely different reason for that plant not working to its rated capacity. Now the other pellet plant that I was talking about is a part of the slurry pipeline, and the 2 million ton pellet plant just borders the existing steel plant, right? So that's a different one. So as you know, the pellet plant to have capacities of scale should be anything between 6 to 8 million ton. So we are now adding a module. We are not immediately adding a module, but we are keeping a provision for adding a module for 4 million ton as and when the steel plant itself, the capacity is increased in future. So that is, but it will be an integrated sort of an expansion. It will be a modular sort of an expansion so that we can sort of bring up a 4 million ton line and just plug it and play it rather than constructing it all over again. So we are making the common facilities fit for 6 million ton in terms of electricity panels and in terms of the buildings, in terms of the service buildings, in terms of the fueling arrangements. So those common facilities we are making it upscalable. Although we will be making only 2 million ton right now, but as and when we decide to add another 4 to it, it should be on a plug and play basis, almost on a plug and play basis. So that is why we are redesigning most of these the service facilities of the pellet plant.
Understood, sir. And my second question pertains to capex. So basically, you have expedited the capex. So which are the projects basically which was expedited, and does this mean that the next year our capex intensity would come down? Because we have that 4 or 5 projects on which we were spending money. So if we are spending 400-500 crore higher this year, that means the next year those projects would have a lower spending until and unless the project cost has increased.
Well, that's a good question, but what is there is what is not possible in the public domain, but you should know is that we have now created a vertical of project organization. And we have had the senior most officials as head of projects who are now sitting at Kirandul, Bacheli, and at Jagdalpur and at Donimalai, which is independent of our production units. So these are fully dedicated towards sanction and execution of projects. And this project vertical has been given full powers to sort of, they have been delegated massive powers so that most of the decisions can be taken at the project level itself rather than. So a lot of bureaucracy in the project management has been cut, and that is what you see the results, that we are about 80% higher than our targets and 40% higher than as compared to last year. So that's the first part of the question, that we have expedited the project execution at each level, in each of the projects, except for where we are going back to the drawing board. Next year I expect the capex to be even higher because Another 2-3 projects are coming up. One is, of course, as I said in my earlier answer, that the screening plant 2 at Donimalai. We'll tender it out in another about 30 days. We'll be able to award the work. The bids have already come in. We are evaluating them, and we'll be able to award. So that's about a 1,000 crore project itself, a 1,200 crore project. We have the downhill conveyor and the crushing plant in Kirandul for augmenting our deposit 14 and deposit 11C. So that is another around 1,400 crore project. We have already tendered out the main packages. We have not opened the bids as well. We are waiting for a couple of clearances. Once they come, then we'll be able to award that definitely by February, March, we hope. So there are 2 more mega projects that will be added to the existing list of projects. So I expect the projects, the expenditure to go up substantially in the next financial year. And going forward, as I said, that we are now at the conceptual level of deciding what sort of an investment is required for our augmenting our dispatches, for especially making a product mix customized to different category of customers. So once we have that, so in the next 5 to 6 years, I believe that we'll have substantial capex, and that is, I understand, required for this company to become from 50 million ton to 100 million ton. It won't be happening free of cost. So we need to make these investments now, so that in another 5 years' time, we are able to have the capacities to mine and sell about 100 million tons.
Understood, sir. So just clarification, this screening plant at Donimalai which you talked about, how much additional this will add in Donimalai?
It will not add additional. You see, the Donimalai already has a screening plant for 7 million ton, which is the production capacity of Donimalai mine. This Kumaraswamy is where we do a lot of contractual mining, and we have dispatch problems there because the entire dispatch of Kumaraswamy right now is by road only. So this will be processing mostly the Kumaraswamy ore. Of course, it will have the facility to process Donimalai ore as well. But it is to that extent the feed is flexible. But it is essentially designed for Kumaraswamy ore and then for further evacuation through the Ranjitpura side. So my constraints of dispatching through road will be taken care of essentially once we use this facility for processing our Kumaraswamy ore.
Understood, sir. Thank you, sir, and all the best for future.
Thank you.
Thank you. Next question is from Kirtan Mehta from BOB Capital. Please go ahead.
Thank you, sir, for this opportunity. In terms of as we are feeling more comfortable about delivering on our 47 to 49 million ton target for this year, how do we now see the FY25 production evolving, and what are the key projects that we'll be targeting to ramp up production further in FY25?
FY25 there will be a stagnation. Maybe we'll add about 1 or 2. We'll go up to 51, 52 because our EC capacity right now is 51, and with Kumaraswamy it will increase to 53. So as of now, next year I don't think we can go above 51 or 52. But we have applied for the EC enhancement in Kirandul, etc., where the public hearing, one round of public hearing is to be held. And it is a long drawn-out process after hearing of public hearing, etc. So those in the Belladilla sector for enhancement of production, it is at the public hearing stage and before the public hearing stage. So we will get enhanced EC in around 16 to 24 months' time. So only then, of course, we have designed the projects for that. We have tendered out the projects for that. So I think we should take another 2 years at least to ramp up further beyond 53. After, so I don't see any production happening beyond 52, 53, even in FY25. And once we get the ECs approved for the Belladera sector. There is no more scope in the Karnataka sector after Kumaraswamy enhancement. So right now the enhancement has to come from Belladera sector, for which the clearance procedure has just begun. So now the public hearings will be held, the ECs will be taken, forest clearances will be taken. It's a fairly long drawn out process, generally an 18 to 24 month time project. So
Understood.
the next major ramp up will happen after about the 2 financial years, current and the next.
Understood, sir. Thank you. And one more question in terms of, we have started talking about the customized, targeting the customized INO projects. So what is the quantum that we can look at on the customized route, and how much premium could it add to our realization? Some sort of initial color?
That's exactly what we are studying. We have put in McKinsey, BCG, Deloitte, and everybody on the job to give us a feel of what the market would be in 5 to 6 years, and what would be the requirement of our customers. That is exactly what we are studying, and once we are clear about that, what the various segment of customers will be, what segment of customer would require what product, then we'll make those investments in making those products. That's the exact study that we are now doing. I mean to say the integrated steel plants with blast furnaces have different requirement from our sponge iron plant with rotary kilns and other things. So that's exactly what we have asked the experts to do, a deep dive on the market current scenario as well as the future expansion plans of our customers, and take it into account and come to a marketing policy. I think that should be ready by this financial year end. We should have a complete clarity of what we want to produce and where we want to produce them. And only then the question of course, we expect a 15-20% jump in realization when we are able to serve our customers with customized products rather than the plain vanilla product that we are selling right now.
Right. One more question, if I may. So, in terms of the outside the iron ore mining sector, we are also exploring the opportunities in other mining area. Could you sort of highlight our sort of plan around the same and progress in that area?
Yes, you'll be happy to know. Sorry, I forgot to mention this in my introductory address, that we have commissioned our gold mine in Australia. It's a small mine to start with, about a ton of production, and in about a year to 15 months. So, but bordering that, we have around 6-7 another tenements which are highly promising. We should be able to complete the exploration and take a decision within the next 12 to 18 months. So, gold is going to be there in Australia. In Australia also, we have a big tenement where we have a very, very promising magnetite deposits, which has also very promising lithium deposits. We are doing the PFS along with our partners, which is Henry or Hancock, which is the 5th biggest mining company in the world. They are partnering us in developing that. So we are in the PFS stage for the magnetite project and the pre-PFS stage for the lithium project. In India, as you know, that we have got 2 coal blocks. One of them we are having slight problem. So we have not been able to operationalize that because of land acquisition issues. The other one, of course, we are going ahead, that is the Rohane semi-coking coal for about 8 million tons. So that should be producing in another 18 to 24 months. So we are diversifying our portfolio. We are looking at across the borders. In fact, we are scouting for probable leases in Western Africa, in Australia, in any other places. Within India, of course, we are requesting everybody if we can get some separate minerals as well. We are open to that, but we are not very hopeful in India because of the, as you know, the auction regime that is there. So for a merchant miner, it is not very viable for us to have a huge amount of mines at a very substantial premium. That doesn't make merchant mining viable. So naturally, we are looking beyond our shores, and we are definitely looking beyond iron ore. The long term should be by around 5 years' time. We should be able to do a top line of around 10 to 15% of from other than iron ore. So that is what we are looking at. Maybe we will look at a target of 5 to 10% overseas revenue as well. So these are the things that right now, some of them are being executed, some of them are being planned, and we are spreading our wings.
Thank you, sir. All the best for this interesting journey.
Thank you.
Thank you. Next question is from the line of Shweta Dixit from Systematics Group. Please go ahead.
Hello.
Go ahead, ma'am. You're audible.
Hi. Good afternoon. Just one question. I did not get it earlier. Could you repeat what is the exact product mix between fines and lumps? And going ahead, if the demand for fines is stronger than lumps, so do we see that product mix changing in the near future?
Yes, the current lump to fine recovery is 30% to 70%. We recover around 30% lump and 70% fines. But our preliminary survey suggests that in the next 5 to 10 years, the lump demand would be substantially reduced and the fines demand would substantially rise. And that is exactly what we are studying now, what our customers would be wanting 5 years from now. So that is what I said in my previous question, we are making a deep dive on the current market situation and the the medium-term market situation in the next 5 to 6 years, and in the long-term market situation, which is 10 to 15 years. And that is how, based on that survey, we will be designing our product portfolio. So naturally, when I say we will not be making all that vanilla product in terms of X-mine sales of either lumps or fines, would rather have them processed, blended, and make customized products for different sort of customers. But this is just right now on the drawing board. We are doing the market survey, immediate term, medium term, and long term, and we'll take a call on the investments that are required. But going forward, I'm told that what we understand, our market primary market study is that possibly in another 5 to 7 years, the lump requirement would be much more subdued. The growth in lump would be much more subdued, and the growth in fine would be much more aggressive. So we are taking that into but then we have the experts sort of doing the entire market survey for us, and based on that, we'll take a call in another 3 to 6 months, see what sort of products we want to make, and whom and from where we want to sell.
Okay. My second question is, could you give a ballpark number of the capex next year? I understand that there are projects, like you said, the 1,400 crore project and the 1,000 crore project.
No, repeat your question, please.
Hello?
Could you repeat your question, please? I didn't get you.
Sure. I was saying, could you give a ballpark number of the capex next year? If you are expecting
capex, we should be doing about 2,200, 2,300 crores next year. This year, we should do somewhere around anything between 1,800 to 2,000 against our target of 1,600. We should be able to do 1,800 to 2,000. Next year, we plan to do around 2,200 to 2,300 of capex.
Okay. Thank you, sir.
Thank you. Next question is from the line of Mohammed Farooq from Pearl Capital. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. So, in the last couple of months, NMDC major client, RINL, has experienced significant success. Could you please provide insight in how much of this has benefited NMDC in terms of volume compared to the previous year? And additionally, what is the...
Can you repeat your question about RINL, please?
Yeah, RINL has done a very significant success.
Hold on. You are not very clear. Can you be close to the mic?
Yeah, okay. Can you hear me now?
Yeah, you are better.
Yeah, thank you. In the last couple of months, NMDC major client RINL has experienced significant success. Could you please provide us insight into how much this has benefited NMDC in terms of volume compared to the previous year? And additionally, what is the anticipated supply of iron ore to NMDC steel plant for the current year? Hello?
I'll just give you the numbers.
Please, okay.
So last year we had supplied RINL with around 27 lakh tons, that's 2.7 million tons. This year H1 we have supplied around 30 lakh tons, which is 3 million tons. So it's been a 10% enhancement as compared to last year. But RINL is one of our three big customers. As you know, that around 70% of our product is sales is accounted by three people, that is JSW, which mainly takes from Karnataka and also takes from their western plants take from Belladira. The second big customer is of course AMNS, which has a direct slurry pipeline from our Kirandul. That accounts for 7-8 million tons. And RINL also accounts for on an annualized basis around 6 to 7 million tons. Now we have a new customer, which is our sister company NMDC Steel, which will consume around 4 to 5 million tons. So, and that's completely dependent on NMDC ore. So we are supplying whatever is required. Right now the plant is running at around 40-45% capacity. But whatever capacity it runs and whatever it takes, we will be supplying to. Naturally, NMDC Steel is our primary responsibility to supply to them. So we will be supplying to them that way.
Okay, sir. Second question regarding when you analyze quarter two production, pricing, and profit, is it reasonable to assume that the production will go up by 30% and the pricing can go up by 20%, so the top line can go at least 50 to 60% up in the third quarter, and also the bottom line can go up 70 to 80%? Just a forecast for Q3.
It's very simplistic to make those forecasts. Those are very approximate numbers. We can tell, of course, our production in the H1 has gone up by around 20%. We intend to maintain that pace. So we can safely assume that our production on an annualized basis will be 10 to 15%, around 15% to 20% higher. Even if we do 48 million tons, so that will be 20% higher than our previous year. So around 20 to 25% increase in production is something that we are targeting and something that we hope that we will achieve. Second is, of course, the pricing. It's difficult to give a number to pricing because
compared to Q2 to Q3, sir, Q2 and Q3, at least 10-20% up, no? From last quarter.
I would be the happiest man if that happens. But pricing is a dynamic thing. The market conditions keep changing. The steel prices are a dampener, but the international prices are very encouraging. So there are multiple factors. Let's see how much further price realization we can make.
Okay. So last question, sir. NMDC now currently has a substantial cash flow of close to 14,000 crores. It's noteworthy that within the listed space, there isn't a single company with a cash reserve of 14,000 crores and the market cap is less than 100,000 crores. We understand that you have a lot of capital projects like 2,000, 3,000 crores every year, but you also do 5,000-6,000 crores profit every year. Now the question is, why the 14,000 crores is in the books? I understand there is capital expenditure, but at the same time you have 4,000 to 5,000 crores profit every year. Could you please explain that 14,000 crores?
Yes, idle cash sitting on the balance sheet is not exactly a great thing to happen. We are designing capex so that there is a quantum jump in capex. This 2,000 per annum has to increase to 4,000 to 5,000 annum in the next 3 to 4 years, and we are taking steps to ensure that the projects are being conceived. As I said, we are going to entirely reorient our marketing infrastructure. We want blending yards and dispatch yards to happen. One of them happened in Kumar Maranga on a small scale. It's a 2 million ton capacity yard. So obviously a lot of capex will have to be made in augmentation of our production facilities. For example, in Kirandul, we have already tendered out for around 1,400 crores of the project. So these projects will all come up and come together. And when the capex would, you will see a quantum jump in capex in the next 5 to 6 years. But yes, it's a profitable business. We generate cash, and even after an average payout of around 45% on dividend and share buybacks of the last 5 to 6 years, we have been able to generate adequate cash for both our capex and for servicing the dividends.
Yeah. The final question on the steel plant, sir. So what news came up, regarding the privatization has been stopped a little bit. You have seen the investor confidence come down a little bit after the announcement. How can we make sure that this is not going to be like one-off like RINL or SAIL in the future? How can we give confidence to the investor in case if it is going to be it is not disinvested?
This is one of the most modern plants in the world, not only in the country. It is one of the most state-of-the-art plants, and once we have commissioned it, we are now ramping it up. If you know, the commissioning was nobody, not even in the private sector. You had the finished product, which is for us the hot rolled within 9 days of getting the hot metal. So that has been a record in itself. We are already operating at 40-45% capacity. We are now testing the additional lines so that we can ramp up to 70 to 80% by the end of the current financial year itself. We hope to do so. We are trying to do so, and by the next financial year, we should be able to run it at full capacity. This being one of the most modern plants, and we should be able to make all sorts of products, so our average realization would be higher than our compatriots in another company. So give us some time, and at the year end we should be able to.
Yeah, perfect, sir. Very good. But one point you mentioned last time, the break-even needs 2 million ton, which is almost 66% of the project. Isn't it too high, 2 million ton for a break-even for this project?
That will depend on the prices. I think I am not very sure. I can't give you a number on the break-even point exactly, but it's a function of price. So I do not know at current level whether it is 60% or 67% or 50%. I'll have to work that out. I'll not be able to give you an off-the-cuff answer.
Okay. Thank you, sir. Thank you. All the best.
Thank you. Next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So a couple of questions. One is you indicated on the tournament that we have in Australia, and you also indicated about the lithium magnetite deposit that we have. Sir, can you highlight the scope of operations over here? How big it can be if everything goes fine?
Yes, the gold right now is a very small gold mine. It will do about a ton in about a year's time. A year, 15 months will be done. But there are 6 other tenements very close to that. So we will be exploring all of them simultaneously. And since that is a gold bearing zone near the Leverton area, near Kalgoorlie, so we expect to have a fairly big gold presence in around 24 months' time. Regarding the magnetite, it has around more than about 1.5 billion tons of very high-grade magnetite. They're just extremely high-grade magnetite. The PFS is being done. Water is a problem there. The PFS is currently being done. The evacuation routes are being currently done. But initially, if if it becomes viable, if the PFS is right and then the DFS is right, then I think initially we'll start with a 10 million ton mining, and it is scalable up to 25 to 35 million ton. But we will by that time have a 30% holding of that. So our proportionate share would be around 3 to 4 million ton initially, and then going up it will be 8 to 10 million ton. Okay. Lithium, of course, we are in the same fault zone. There are working lithium mines just above our tenement and just below our tenement. So we are now just exploring right now. So we are at the pre-PFS stage. So we will hopefully undertake the PFS starting next April. Hopefully we'll start the PFS. It should take around 18 months to do the PFS. So of course, if the results are encouraging, we'll fast track everything. So let's see how the results come, and then we'll let you know.
Right. And so gold and magnetite, both will be, projects will be viable, right? So from a unit economic standpoint, they will be significantly positive.
Naturally. That is what the PFS and the DFS is there for. If it is not viable, we will not be doing it. But the initial report suggests that they are very encouraging.
Okay. Sir, any IRR number on the
already mining? In one mine that will be viable, it will not give us huge amount of profit, but we expect 8 to 10 million only in the next about a year. But that's not the big thing is the other 6 gold tenements that we have in the surrounding. If we do that, then that will be a substantial.
Sure. Sir, would you like to give some project IRR on the current spot prices for gold and magnetite?
I won't be able to give you one straight away.
Okay, no worries. And so lastly on India specific, there was this recent amendment. There have been 6 minerals which have been denotified from atomic minerals. But you said we are not very hopeful given the auction regime. So are we saying that we would not go and even bid for it, or how should we understand that?
No, you see, the atomic minerals from our strategic standpoint, that's not something that's our area of interest. Because most of the value realization lies in processing, not in mining. It's whether it is vanadium or uranium or whatever these minerals, these are the processing technology is the main challenge there, not the mining. And you don't realize too much value out of mining in these minerals. It's the processing that's important. And as a result, except for we have a short list of 6, 7, 8 minerals which we want to do with bauxite, iron ore, gold, lithium, and some others like copper. And those opportunities, wherever we get, whether in India or outside, we'll be happy to look at. So we have narrowed it down to 7, 8 minerals only, which we are really interested. These small minerals which are found in small traces and require huge amount of processing is something that we are not very keen of as of now.
Sure. And sir, lastly on diamond, what's the update in India and how should we look at this business 3 years, 5 years out?
We had got the Supreme Court clearance. We have approached the Power Committee for our environmental clearance. Some clarifications are required. So hopefully in the next meeting we'll be able to put it up and let us see if they give us the clearance. Then we are ready for mining. We can go in for mining within a month's time after getting the EC clearance at Panna.
And the scope for a project? Any tonnages? How should we look at it? Carat?
Beg your pardon, I think it's 30,000 carat mine that we have at Panna. But initially the first year I think we should get only 10,000 odd carats. But as we ramp it up, that mine needs to be redesigned. It will take us a couple of years. But no further diamond projects in India as of now. Diamond is another mineral that going forward we are not very keen on.
Sure. This is very helpful, sir. Thank you so much. All the very best.
Amit, I think it's been more than an hour now. I think I have another meeting to attend with the minister.
Thank you very much. Ladies and gentlemen, we'll take that as the last question. And now hand the conference over to Mr. Amit Dixit for closing comments.
Thanks everyone for attending the call this afternoon. I would also like to thank the management for sparing their valuable time for interacting with us. I will now invite Mr. Mukherjee for his closing remarks. Over to you, sir.
Yes, thank you for being with us. We are doing fairly well, but we expect to do better. The near future, in the medium term, we have huge plans for the company. We wish to reorient the entire way that we sell our product and the products we sell also. So the company is under a major transformation right now, starting with what you have seen with the logo itself. We are very keen. We have taken our sustainability agenda very, very seriously. We have just set up a full-fledged sustainability department. We plan to have, we call ourselves the responsible miners. That is the tag that we have, and we take our commitment very, very seriously. So going forward, we not only want to grow big, but we also want to be more responsible towards all our stakeholders, be it our customers, be it our shareholders, be it our the local community, be it the environment, be it our employees. So we hope to be not only bigger, but certainly better as well in future. Thank you.
Thank you very much. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.